Welcome to CareyBrosPros, the podcast for construction pros by construction pros, because good information is always the best tool in the bag. Now, here are James and Morris Carey.
Great to have you back for another edition of CareyBrosPros. Hi, I'm Morris.
And I'm James, and too often a homeowner will approach a builder about rebuilding a home lost in a disaster. Hurricane, flood, fire, but the amount that the insurance company is willing to pay out will not even come close to replacing the home that existed.
Our guest for this segment is ray-bourhis. He's an attorney and the principal of ray-bourhis Associates based in San Francisco. Ray specializes in policyholder representation. You may have seen or read profiles featuring Ray on 60 Minutes, The Wall Street Journal, Dateline, and dozens of other programs and publications. He's also the content author of the website insuranceconsumers.com. Ray, welcome to CareyBrosPros.
Thank you. It's great to talk to you, and thank you for the incredible job that you guys are doing.
Yeah, we're honored to have you here, Ray, because we know your track record, and we know you work with consumers who are working with insurance companies, and for a lot of people, it's the first time this sort of thing happens, and they don't know what to do.
I should say before we get too deep into our discussion that we met Ray over 20 years ago during the Oakland firestorm where over 3,000 homes were lost. We partnered with Ray and several others to create a consumer seminar that helped those folks get information that they needed in order to rebuild their homes, their neighborhood, their community, and to get fair settlements from their respective insurance companies. So, Ray, we did that recently in Santa Rosa, and now, of course, there are several wildfires throughout the country.
Including up Northern California and Redding.
The Car Fire in Redding. So we thought it would be prudent with all of the floods and fires for you to share with our pro audience consisting of designers, design-build contractors, builders, architects, some of the things that they should know that will help them help their clients. So let's start off, Ray, by asking you to give us an overview of what the typical home insurance coverage consists of.
Well, it's complicated, and at the same time, it's pretty direct and simple. The first question is, how much insurance do you have, and what is it going to cost to do the work that needs to be done? And the thing you always have to be careful about is the subject of underinsurance, because if the amount of insurance that you have is not sufficient, you may be able to get a higher amount of insurance based on who caused that to happen. Often insurance companies will underinsure a property because it allows them to quote a lower premium and it gives them the business. Sometimes they do it because they want to cut their own responsibilities and losses, and they don't want to insure properties for what they would actually cost to rebuild on a broad scale. They don't care about one house, but they care about neighborhoods and areas. So you want to find out whether your insurance is adequate or not. Talk to your contractor and determine what it's going to cost to actually rebuild the property. The idea of talking to your contractor is really important because insurance companies have computer programs and they have their own paid experts who will come in, and often they will say that a property can be rebuilt for less than it would actually cost to rebuild it.
Boy,
I'm sure that's something that you see all the time.
Oh, yeah.
You're entitled to like, kind, and quality, which is a simple concept. Basically, it means that if you have, granite countertops, you don't want to replace them with Formica. If you have hardwood floors, you don't want to replace it with recycled wood from China. Plumbing fixtures, electrical fixtures, the quality of construction, plaster versus sheetrock, depending on what you had. All of these factors are really the responsibility of the contractor to make sure that the policyholder is getting like, kind, and quality and sticking to their guns with respect to that. Often insurance companies would like to save money, a lot of money, by not providing what it is that their policy and the law in California requires them to provide. That would be my first thing to keep an eye on. The second thing really is the terms and conditions of the coverage itself beyond the policy limits. In other words, what is it that is covered and what is it that is not covered? What does the policy say with regard to code upgrades, for example? if there are higher code standards that exist now than when the house was built, and you can't really get a permit unless you're going to put fireproof shingles on the roof and that sort of thing. You got to make sure that you have an insurance policy that covers those kinds of code upgrades. Often, insurance companies will call something that it's not. So they'll say, yes, oh yes, you have code upgrade coverage. But then when you read the fine print, you see that there are limits on that. So you want to read the policy carefully to make sure that code upgrade means what it's supposed to mean, and that replacement value means what replacement value is supposed to mean.
Wow.
Those are some of the things you want to look at right away.
The first thing that came to mind when I was thinking of speaking with you today, and that was, is replacement value insurance really replacement value insurance, or can it be something else? And I guess you've just stated that it can, in fact, be something else.
That's right. You have to be careful because often the agents that sell the policies are very nice people. With respect to agents and with respect to claims adjusters, I call it the Santa Claus syndrome. The insurance company's not going to sell very many policies if they don't have a nice person selling the policies. And so the people that you're dealing with are very nice people, but they have not necessarily been trained to understand what the ins and outs of the insurance policy coverage mean. And so before you just go with whatever they're going to suggest, and that's another point. Some people may disagree with me about this, but I don't like the idea of making your first telephone call to your agent. The reason is because the agent is not a claims specialist. The agent is a salesperson. And I think that what you've got to do and what the contractors and architects have got to do is make sure they're dealing with people who really know what they're doing and who have sufficient authority to be able to make things right. And, often the insurance companies will try to get a contractor on the insurance company's side by, grinning and smiling and saying, we can work this out. We can work it out. We can work it out. In other words, don't talk to a lawyer. Just talk to us. We know what we're doing. And the next thing you know, you're putting Humpty Dumpty back together again in a way that is very different than what it looked like in the first place. You have to be careful about that because it affects long-term property values.
So, Ray, for our pro audience who have the good fortune to be in a position to help someone in need who needs a home repaired or replaced, your best advice would be to work with the homeowner to assist them in determining what existed. And you mentioned, the hardwood floor, and you mentioned other finishes. I imagine we're looking at the size of the home, the foundation, the plumbing, the electrical, the type of roof, the type of windows, the type of doors, the door hardware, the bathroom fixtures, and to essentially create, for the lack of a better term, an as-built set of plans that will allow for the contractor to create a detailed estimate that can be utilized to solicit a fair and just insurance settlement. Is that your advice?
Yeah, that's exactly right. And one of the things you have to watch out for, there's a big difference between an estimate and a bid, as you know. An estimate is what somebody from out of town with a briefcase breezes onto your property and says, I think you can replace this for $227,867.14. Very precise number, right?
Yeah.
The question is, does that person, whether he's a contractor or whatever he is hired by the insurance company, is that person going to be responsible for putting it back together again for that amount of money? And the answer is no, because it's an estimate, not a bid. A bid is a different matter entirely because the contractor knows that he's going to have to do the job for what he or she says he's going to be able to do the job for. And you can rely on your own expert, on your own contractor, much more than you can for the insurance company's experts, who, by the way, are often brought in from out of state, especially if there's a disaster and they need a lot of personnel on site. They'll bring them in from out of state, and those folks don't necessarily evaluate things on the basis of California time and materials costs and expenses. They are perhaps estimating it based on what the standards are in Ohio or Indiana or Mississippi or wherever they come from. That's where the issue of computer estimates comes in. I've seen many situations where the insurance companies, Farmers was notorious for this, would say, okay, well, we'll tell you how much we think we owe on this policy. We have a computer that takes everything into account. You don't have to worry about anything at all. We'll take care of everything for you. You know what they say about computers, garbage in, garbage out.
Yeah, exactly. Yeah.
You got to watch out for that.
Yeah.
The name of the game is rely on your own architect, your own expert, your own contractors, and not somebody else's.
All right. Well, that's a good point, but none of that comes for free. So here's the question for you. These poor people who have lost everything and they're faced with rebuilding, and to take your advice, which we agree from our own experience in dealing with the disasters like this, is to get your designer, your architect, your contractor, or your team on board, create the scope, if you will, and the finishes and the estimate that will help you get a reasonable settlement. But to do all of that, that's going to cost money. How does someone go about bridging the gap between the loss and the settlement for something that could cost $5,000, $10,000, $15,000, $20,000 in effort from a designer or a builder or a combination?
Well, yeah, that's a really good question. I'm going to throw it right back to the Carey brothers because that's not my department, so as much as it is yours. What's really important is to make sure that you have a solid understanding with the people that you're getting your information from. And I don't know how it works. I've seen many situations where the contractor, because they're hopeful that they're going to get the job, comes in and they won't charge very much or anything at all in order to give you a solid bid that you can rely on. In other situations, people find out that it's easy to go broke by giving away your time for nothing and only to have the policyholder go with someone else in the end. And so I don't really know as much about that, frankly, as you do.
Well, I think Morris and I would both like to weigh in on that, and I'll say this. Here's what the insurance company is banking on. The insurance company is banking on you not doing your due diligence because you have limited resources and you won't do what it will take. Knowledge is power, and to generate the information that you need in order to get the best settlement that you will get. So there are a couple of things. One, you can get advances, as you know, from insurance companies for living expenses and for certain costs associated with the immediacy of the loss. That's number one. Number two, you're right. If you have a reputable builder and you want to establish a relationship, a builder might enter into a design agreement that where the payment can be deferred once a settlement is made, included in the cost of the settlement, because we know that architecture is a reasonable loss. It's a cost associated with the rebuilding process, so it can be deferred that way. You can borrow. You can even put it on a credit card if you need to get an architect or a designer or a design builder involved if there's a cost associated with that, and make a minimum payment on the credit card until your settlement is made, and then you pay that off completely out of the proceeds from your settlement. So I guess the point I'm trying to make is this. You don't want to not do your due diligence because you don't have the resources. You want to find the resources up to and including negotiating with an architect and or a builder to defer their fees until the settlement. You know, I'll do a design contract and it's $10,000 or $15,000 or $20,000 or whatever. It's a reasonable cost. It's an insurable loss, and you'll get paid for it. We'll wait for our payment until your insurance is settled, and that's the way to do that.
One of the issues, people have to keep their eye on the ball. You know, if you're talking about hundreds of thousands of dollars and even more that you're going to need in order to put like, kind, and quality together again, the amount that you're talking about for running the estimate is a very small amount in comparison. And you will lose a lot more money than you will gain by not paying that amount of money that you have to get a solid estimate that you can rely on.
Yeah, yep, there you go.
I couldn't agree more. What's the biggest mistake, Ray, that a consumer can make when it comes to trying to get a settlement with their insurance company.